Today, let me walk you through what Budget 2026 didn't explicitly say, but every investor should understand this. First, the government has clearly doubled down on long-term manufacturing and strategic sectors. Instead of short-term consumption boost, the budget puts serious money into semiconductors, biopharma, electronics components, rare earths, and capital goods and textile modernization. Multiple sector schemes and production ecosystem have been announced with multi-year outlays. What this tells investors is simple. Policy supports in shifting towards deep industrial capacity, not just surface level growth. That means long cycle opportunities, but also patience is required. These themes won't play out in one quarter or 1 year. They are like 5-10 year structural stories. Second, infrastructure is not slowing, and that's more important than it looks. Capital expenditure has again been increased with continued focus on freight corridors, waterways, high-speed rail connectors, city economic regions, and logistics. But here's the hidden message. The government is now actively trying to crowd in private capital using risk guarantee funds, REITs, recycling of CPSE assets, and bond market development. Investors should read this as a signal. Infrastructure financing models are evolving, which benefits infrastructure developers, financial platforms, and bond market participants more than just construction companies. Third, there is a silent but major push towards financial market deepening. The budget proposes market making framework for corporate bonds, derivatives on bond indices, municipal bond incentives, and reform in foreign investment rules. This doesn't create instant excitement for like tax cut, but it strengthens India's capital market plumbing. For investors, this means debt market, bond funds, credit strategies, and structured product will likely become more important in portfolios over the next decade. Fourth, the fiscal math sends a confidence signal, but with a caution tag. Fiscal deficit is being guided lower and debt to GDP is projected to decline gradually. That's positive for macro stability, currency confidence, and long-term interest rate trajectory. But it also tells you something else. The government has limited room for populist spending shock going forward. So market expecting large giveaway every year may be kind of disappointed, I would say. Fifth, and this is very important for markets participants, trading activity is being quietly taxed more. Security transaction tax as not headlines retail talking point, but it directly affects short-term traders and high frequency strategies. The signal is clear. Policymaker prefers long-term capital formation over speculative churn. Investors should read this as a structural tilt towards disciplined investing rather than leveraged trading. Sixth, the service sector strategies is more structured than it appears. The budget introduces a high-power committee linking education, employment, and enterprise with a focus on skills. That suggests future policy incentives may increasingly favor scalable service industries, including IT, digital infrastructure, data centers, design, and medical value tourism. Investors should watch these segments early before incentives become obvious and fully priced in. Seventh, the data center and cloud tax holiday in 2047 is a sleeper announcement. This is not a mass market headline, but globally competitive tax treatment for data centers, infrastructure investment into India. That creates a second order opportunity in power cooling, real estate, fiber network, and equipment suppliers. And finally, what the budget really tells is disciplined investors in this policy is moving forward where the process, capacity, and system kind of not a quick boost, but manufacturing ecosystem, infrastructure network, financial market depth, skill and technology platform, there are kind of a slow build asset. The favors diversified kind of a process driven asset allocation based investing rather than prediction based bets. So if you are an investor, the takeaway is simple. Don't just react to the budget headlines. Read the direction, reduce speculation, increase discipline, there where the long-term wealth actually gets built in. So what do you think about 2026 budget? You can share your thoughts in the comments.